Greetings, everybody. It is Cowboy, aka Nick here. We have Ben Kelleran with us today on this lovely, cloudy Tuesday out where Ben and I are. And of course, we have some neat goodies in the description for you. Go ahead and take a look in there. We've got Ben's info, his Substack, how to find him. We also have a goodie for you from Algo Factory, free Algo. Check that out. Now, Ben is definitely a very organized and well-researched thinker when it comes to the energy markets, and also has awesome political chops. And one of the more enjoyable guests we have here. Great to have you on, Ben. How are you, sir?
Thanks for having me. I'm doing pretty good when watching silver popping 360, which is always fun. I know there's some comments already about that, and we can get into that. I don't want to do a complete repeat of the precious metals breakdown, but I've been looking at gold, silver, platinum, like basically all the commodities lately, and there's a lot of stuff going on that's interesting. And then we can get into some of the political stuff that I've been seeing over the last couple of weeks, because it's, I mean, every week on social media, I know I for sure spend too much time like scrolling, but you see something where you're just amazed that this is actually happening on some of these different things, and people are just look at it. And I don't know if it's somewhere I kind of my head screwed on a little different, but you realize the absurdity of a lot of stuff going on. So we can save that rant for a little bit later, but lots of interesting stuff going on in markets these days. I know we have the Fed and all this other stuff this week, so we can maybe chat about that as well. But lots of stuff to pay attention to these days.
Well, it's almost like by design, they almost give you too much stuff to pay attention to, right?
Oh, 100%. 100%.
It's like it's the whole when a bunch of birds will fly in a certain pattern so that the predator doesn't know which one to get, and it sees too many targets and it just doesn't know what to do. And I've even had that while hunting. Too many birds in the sky. It's like, hey, you just got to pick one and shoot. But I mean, you could rant now or rant later. I know people like rants, but either way, it's your show, man. Take it where you want it to go.
Yeah, I'll fire it up with a quick screen share here. But I kind of talked a good bit about some of the precious metals and some of the stuff I've been buying lately, not in any massive size as some of the silver miners. But you look at gold, I think we're getting ready to we've worked off the move, I think, to 4,400, call it. And I wouldn't be surprised at all if we're getting set up here to start making our way towards 5,000 over the next 3 to 6 months. But my guess is all-time highs are probably coming here fairly quick. And you see silver. This is, I think, one of the more interesting stories. And this is where I kind of have a little bit of a diverging viewpoint. And so this is where it'll be interesting to maybe get your thoughts on some of this stuff. But with silver in the past, like if you go and zoom out to long term, in the past, it's kind of always been, okay, we get a giant pump to 45, 50, but that is like the beginning of the end, and it just collapses from there. I think with the story for silver now, with the industrial demand, with the supply demand gap, I think it's basically going to be 3 yards in a cloud of dust, as Tom Longo likes to say, where it's you have the paper markets and bankers trying to keep a cap on silver. And that's, you look at where silver should be trading, and people can argue, oh, it's had 8 up months in a row, all this other stuff. It's like, well, if you're going to get price discovery, this is, it's going to take some time. It's not going to be, okay, we go to 60, 70, or you have some massive pump and then it collapses back down again. Because I think you see what happened after 2011, where it's like, okay, silver's back down to 15 an ounce. And same deal where the Hunt brothers were trying to corner the market, where it's like, okay, there's some amount of games being played, but where things are now, I kind of look at it and say, like, why does this not turn into a multi-year secular move that is, I think 100 an ounce is a lock. Don't ask me for a timeline on when. But like if we're looking at 70 or 75 an ounce next year and 80 somewhere after that, like I think it's something where it's going to take years to play out, and it's not going to be okay, this parabolic move that a lot of people are using past history to kind of say, oh, yep, we're going to get a move to 100 an ounce in the next 6 months, and then it's going to basically take a shitter and go down the drain from there. I think it's going to be something where it's more more stable, and we'll kind of see how long it takes. But what are your kind of thoughts on the different potential move for something like that, where it's instead of just a giant pop and drop, it's something that plays out over years?
I think it's a pop and lock, to use breakdancing terms. But I think it fits here too. Like, so you have the industrial demand, you have the things that you mentioned, but what you also have is, for all these years, the COMEX has held price down with paper contracts, right?
Mm-hmm.
And that's because they could always settle in physical. We've been talking about this for a while. In fact, V the Grill told us at Algo Factory like 2 years ago, he says, once silver goes above 32, you're going to see it start to really rise. And the reason is that at 32, the COMEX was able to operate, settle physical without having to kind of move things around. You know what I mean? There was enough. First of all, when the COMEX settles, it's a certain kind of silver, right? So it isn't like your, rounds that you're buying at the cash and carry
bars, right? I think.
Yeah, and they have to be certain grade, and it's a certain kind of silver. It isn't like just whatever silver. Now, if sure, you can go and send out the Smurfs and buy a bunch of silver wherever you can get it and melt it down, and the refineries take time. And so, long story short, there's just not enough of that kind of silver to go around. And so, basically, in order to keep this from getting out of control, what they have to do is find a way to either stop price from going up or to settle in physical. Now, it's my belief that there are deals being made to keep it from breaking entirely, but basically, I think the COMEX is going to be rendered inert, right? And Rob says it in the comments there. It's 4 nines, fine, 1,000. I think he means 1,000 grams, kilogram. Good
1,000
delivery
pounds
bars
would be pretty big.
That'd be a big bar, yeah. But so it's basically a kilogram of 4 nines. So what needs to be understood though is that over in Asia, that's where the center of metals has already moved to. Like, people don't want to talk about that. But in reality, yeah, he's saying 1,000 ounce. Okay.
Yeah,
that sounds about right.
That was what I was kind
That
of
sounds right.
figuring as well. And
not grams, but ounces.
The one thing that I'll jump into is that a lot of people don't realize that there aren't a lot of silver production does not come from silver mines. It's as a byproduct of other like they're basically called polymetallic deposits, whether it's a zinc mine or there's some with gold, some with copper, it's not just, oh, we found a giant deposit of silver and that's all this mine produces, right? So to assume that the higher price is gonna kick on a bunch of new silver production overnight, I think is silly. And you look at what some of the silver miners are doing today. It's like, oh, finally we're getting a nice 5% bump on what's a move to 60, but you still start to do the math on it. It's like some of these things are trading at 6 times earnings, and if you run silver prices, like, they're cheaper than that. There are a couple that I own that I like that are coming online next year, and it's like you run the numbers at $60 silver, and it's like, oh, this thing's trading at 3 times earnings. Like, I think there's going to be massive re-rate in some of these things as you get to production or like company specific things. But again, mining's risky. It doesn't make sense to just go and own one of these things. It's definitely a basket approach. But the other thing too is, like, if you look at, we talk about this a little bit last week, but you look at the gold to silver, and I think that is a chart that screams we're heading to 60, and we'll kind of see how long it takes, but that's not a like there's some argument about gold being more expensive relative to other things, but I mean, you go back and look at the last, call it like 5 years, 10 years really, and there's not a there's a lot of running room if we start to go to 60 ounces of silver to 1 ounce of gold. So that I think is super interesting. And the other one that I'll talk about briefly before we can start ranting about politics and whatnot is platinum. And this is something that looks to me like it's ready to make another run. The thing about platinum is like it'll go to sleep for a while and then like 10 to 15% run, go to sleep for a while. And I think we're probably looking at 1,800 an ounce here in, I mean, when it moves quick. So it'll do kind of the same thing. So I think platinum is another one where like 2,000 an ounce sometime next year, I think is basically a lock. And longer than that, I think you're looking at, I mean, I would guess 3,000 to 5,000. So I think it's very interesting space to be looking at. And same with copper. Like copper is basically, this is the tariff like shenanigans. But if you pull up the London LME contract that didn't have the same basically dump, we're basically all-time highs on copper right now. And if you look at the Grasberg mine that we kind of talked about, I think a couple months ago, I think it's 5% of world copper supply. Like it's a big mine, and that coming offline for a couple of years, I think is going to be it's going to be an issue for supply, but very bullish for the price. And it's kind of the same deal where it's like you don't have a ton of copper projects in the pipeline that are going to move the needle. And so at least in the next 12 months. And I think $6 a pound is kind of the same thing. Like I look at that for next year and I think that's perfectly reasonable. But the thing about copper is when it gets going, like you could easily see a bigger move than that, because it's kind of the same deal as when markets start to wake up to like same thing as silver and all these other things. There's even a Bank of America note saying that all commodities are going to look like gold in 2026. And like there's a lot of people starting to wake up to kind of the broader thesis. I know there's a lot of energy bears, but I think the setup on copper and the metals is very, very interesting. Yeah, I was looking at some of the comments on I think that was in regards to the silver refining and operations from other mines. There's a lot of interesting things that I had not looked into in the past on like what it takes to get like metals into form that can be sold. And you've got like the refining operations, you've got like a bunch of different plants, and from like a lot of these byproduct where the production is a byproduct of another mine, it's a lot of times gets sold off to like a royalty company as like a stream. But there's a lot of different nuances to what goes into gold and silver market. And that's where like the actual, I think, physical demand, like people talk about solar panels and people talk about electrification and all these different things, but like we've been in a massive deficit for silver production versus the demand for at least like 5 years, I think longer. So whether or not that turns into physical market shenanigans for a lot of the paper contract stuff, we'll kind of see if it gets worse. But I've been poking around, and there's a lot of people talking about, hey, we're standing for physical delivery. And a lot of the people that aren't public about it, but you see a lot of contracts where they're not interested in just taking the cash. So that's I think something to keep an eye on, and we'll see we'll see what happens at the Fed meeting this week, but I don't have any strong view. It sounds like they're cutting rates again, another 0.25%, but I think
I'm starting to think they're not.
no. Why is that?
Well, you had the weak inflation data, and then you also had a strong jobs report this morning. So I don't think they will.
Interesting. It sounded like
They
lot
don't
of
really
people
need to, you know. There's no reason to cut rates. The economy's functioning nominally.
Yeah, in theory.
In theory, yeah. On paper.
Well, I guess the thing that I'll point out, whether they cut rates or not, I think there's some interesting stuff going on with like the long end, where I think the 30-year, if I can actually find, yeah, there we go. I think this looks like we are set up for a move to 5%, and there's a lot of things going on, but I think on the long end, yields are going higher over time, and unless they start to come in and play games with it, we'll see. So
yeah, there's always games. I mean, ultimately the real rates are determined by the market. The Fed prime rate is another story, right?
Yeah, short term versus long term, all that. But I'm just pointing out that there's a setup where mortgages are not going to get better as far as interest rates because of 10-year going to 5, 30-year going to 5. And again, this is not like a short term thing. This is a longer term like view on a lot of stuff. But I think there's going to be issues as far as funding. So that's kind of the market rant for today. But wanted to get into a couple different things on the political side where I think it's pretty interesting because there's been a lot of talk about Somalians in the last week. There's been a lot of talk about different things going on. The most interesting thing that I think people are, and I have a post that's in the drafts folder to work on over the next, I don't know, like month, try and get it out for like 2026 predictions. But the biggest thing I look at and see is like the solutions to a lot of these problems are not rocket science. And at the same time, for a lot of people, like they're politically incorrect. And this is the I'll fire up the screen share again. This is a chart that is easier to see than it is to explain. But when like people talk about like the wealthiest generation in history and some of these different things, it's not a mystery why like some of the stuff happened. Like you look at where like the like what happened to immigration in the 50s and 60s, and especially like the demographic makeup of the immigrants before in like the early 1900s. Like that's where my great grandparents basically in the early 1900s they came over with nothing and then were able to make it out to Seattle and build up basically do fairly well for themselves. So like the thing is, like you look at the difference on this chart and it's pretty interesting to think about like the impacts of that over the next I mean, you can already see what's happened in the last 50 years of kind of how things have changed. And like it's been obvious for people and definitely more obvious in certain parts of the country, but like the neighborhood I grew up in is not anything like the neighborhood that the way it is today is not anything like it was a long time ago. And you look at Hart Cellar, you look at some of these different things that need to be changed. And this will maybe be a good guest for you guys at some point. I've had on my podcast a couple times, Will Tanner. He's very, very sharp on the political side of things. And by the power of Cinnabon, I rebuke this.
I saw that. I rebuked the Somalian.
Well
That's
done.
funny.
Well done. No, but you see some of these things and like there was I'm sure you saw this headline. It's like someone in Portland got stabbed and called called the person a spicy word after everyone's favorite word of power regarding our African American friends, but they called him that after getting stabbed, and so they let the guy off. It's like, at what point are we gonna like do something about this? And it's so funny to think about, because it's like, okay, he's not guilty because he knew he was going to use the word when he stabbed him. It's like, oh, give me a break. So
Yeah, man. I mean, it's this is anarcho tyranny. You punish normal law abiding people for not putting a comma in the right place on a document, and then you don't do anything to the stabbers.
yeah,
But that's, you
have to protect the stabbers.
Yeah, you have to protect the stabbers. I think it. Look, I carry a gun, so don't stab me. I don't want to kill anybody, but you can't do that in Portland, can you?
Well, carry a gun.
I don't think so.
No, that you can only carry water pistols. That's the only thing you can carry. How you doing, Ben?
doing pretty good. How are you?
I'm hanging in there, brother.
Yeah, I'm pulling up this is the funny thing too about the headline. It's like he had said the N-word, and then you go and like actually read the article. It's like, oh, turns out he said it after.
Yeah.
It's like, yeah, here it is. It's like, you'd think they would put that in the headline, but no. Right? It's just kind of like the same, like, clown world, like, news media headlines that we get all the time. So, but yeah, like, this is where it starts to drive people, I think, a little bit nuts. But, like, I think if you start to look at, like, potential fixes, like, this is where you get hard seller and Immigration Act of 1990, like no more H-1Bs, like all this other stuff that I think is like very detrimental to the country. And this is and affirmative action too. Like, I think we should be able to look at different things when hiring people, and I think it would
I think we should all be assigned numbers instead of names on every application. And
I think we should all wear like yellow stars.
Yellow stars.
V doesn't know his history. Actually, V, you know your history better than just about anybody I know.
Are you referencing what's happened in Deutschland?
Yeah, what's happened since the past. Yeah.
Yeah.
No, I'm with you. I think the problem right now is that because of the DEI in the education system, we have a lack of local bred or whatever, American born and bred students who can perform at the level of some foreigners, especially from China. So the first thing that needs to be fixed is that system, that university problem.
That needs to be corrected, because you want to talk about getting rid of what's it called, H-1Bs. I want everybody to go look at the Stanford, MIT, and Harvard math competitions, and you show me who's represented there.
Yeah, it's all Asians.
It's all Asians and Indians, bro.
And Indians, yeah. So but we have
look at the spelling bee championships. It's some 8-year-old Indian kid who's outdoing an American sophomore in college. It's ridiculous.
But I was in math classes with all those guys performing at their level. So it isn't.
Well, you're the
it's not a race
scallion.
thing.
That's what it is. You're the Sicilian scallion.
What it is? It's a cultural problem. And on top of that, it's when you're
white parents do not emphasize education. You know what they emphasize these days? Well, Billy, it's time for soccer practice, Billy.
Why would white parents emphasize education when they know their sons are not going to get in? Because they're going to not get in.
It's not just that. It's their daughters too. Like,
instead,
their daughters too. They're going from practice to practice to practice. Look, you got soccer practice at 3:00 after school, and then right after that, Joni, we're gonna go right over to what's it called again? Lacrosse, and then after lacrosse, we got tiddlywinks and leapfrog. And then by the time you get home to do your homework, it's 9:00. You're gonna eat dinner, do about 30 minutes of homework, and
that's
go
all.
to sleep
That's
and wake up, and then do your what's that Obama education thing that they created?
Common Core.
And then you're gonna go do your Common Core math the next day. There you go.
That was Bill Gates too. I think he's the big founder behind that.
These people are obsessed with neo-feudalism, man.
Yeah. Well, I think too, it's just the whole idea that America should be for Americans, I think is something that people are starting to figure out, but it's kind of tough to get that through to people that have been like taught to view
Propaganda.
themselves as like the oppressor class or whatever you want to call it, right? And like this is a Gulag in the chat is putting up a it's an experiment that people I've talked to have done where they change
He's got the right idea.
change their demographic to
Sanjeet Punjabi.
like apply to college.
And then what you do is take some like heavy tanning bronzers, dye your hair black, and then you speak with an accent, and you got it.
I take exception to the Tiddlywinks comment. I lettered in Tiddlywinks.
Did you really?
I have no idea what that is.
I've been boiling on that for like 60 seconds.
Amazing.
So no, I think it's not only that. Who did it? Ben, I think it was somebody. All you got to do is say you're like 1/16 Native American or something.
Well, it worked for Elizabeth Warren. So
is that who it was?
Yeah.
Yeah,
I think those games are going away. I mean, Ben, you're scrolling, right? I've been permanently put in Twitter jail, unfortunately, so I can't I can't interact. I can still scroll, but without the interaction, it's just like not that interesting. So, what are you seeing in like? What's the temperature check? Like, what are you seeing out there? Are the young people getting it or not?
I mean, the people I talk to they pretty much have it figured out, but I think there is it's hard to gauge if it's like really starting to go so-called mainstream or not, because it's one of those things where social media, based on your algorithm, will like automatically put you in certain echo chambers, and so you see like what's on the For You tab and following, and like I think the thing is, like, this is kind of a little bit on that topic where like a lot of the young guys like grew up in a very different world from what America was like 30, 40 years ago, right? And right, if you're going from high school to college to first time in the job market in like the 2010s to 2020s, where it's like you've got HR training and like all this like privilege bullshit and DEI and ESG and all these things that are just insane, right? I think that's where you either break and like submit to it, or you start to realize, hey, this is absolutely nuts, and you start to look for actual solutions. So that one, yeah, this is the comparison too, like where you go back to that chart where you compare what kind of has changed in the last 50 years. It's like you don't have boomers didn't compete with outside nationalities for jobs, for academics, for trades, for anything like that. And it's kind of the pulling up the ladder to as far as the economic system. And I'm not trying to turn this into a bitching and moaning session about boomers, but the idea that nothing's changed is still like the exact same as it was 50 years ago, where and this is was it Mike Green, I think, wrote a really good piece on it. You guys might have seen it, but kind of talks about like the line to be middle class is now 140,000 if you're trying to raise a kid, like raise a family. As far as
that's just insane. I
mean, it is, but
it's fucking insane.
It's when you start to look at how much some of these different things cost and what like healthcare and transportation and these different like insurance, all these different expense
living
lines.
in the middle of nowhere, Alaska is looking more and more appealing these days.
Talk to Lisa in the chat. That's where she is.
That's the funny thing is there's like I'm never gonna, I think, live in New York or like a major East Coast city, but
aren't you in Seattle or something?
No, that's where I grew up. I'm in Boise now.
Oh, that's right. That's right. You're in Idaho.
Yeah. But I think there's certain places of the country that'll come through whatever comes next a lot better. I think Idaho and kind of Mountain West area of the country is one of those areas.
Well,
But
Idaho's had better year-on-year income growth than any other state.
yeah, I mean, I'm sure part of that is Micron. I'm sure part of that is due to the actual economy. But this is one of those things where it's actually pretty interesting because I was poking around. Last week I had Melody Wright on the podcast, and we talked a lot about real estate and housing prices, and like she goes deep into the weeds on that stuff. But it was actually a really good conversation. And like out of curiosity, I started looking at like what it costs to rent places around me for like the 12-month lease or whatever it is. And a lot of these buildings are now offering like 6 weeks rent and free parking. And
Oh, wow.
like they're basically starting to do a lot of concessions. And it shouldn't be, I mean, it's not that shocking when you have, I think, 3 like massive, I think it was basically 700 units all coming online in the last like 6 months all at once. Because like 3 large buildings, at least for Boise, all got finished at the same time. And so now all the other, like even the building I'm in now is struggling to fill vacancies and whatnot. So like I basically was asking them, hey, like, are you seeing a lot of this? And they're basically slashing rents. Like I could move into, in the same building, I can move into a 1-bedroom versus the studio and drop my rent. And there's a bunch of places where it's like, okay, I should go poke around and see what that looks like. So I think that's, I mean, it obviously depends on different locations and whatnot, but there's just been I think rents are going to get cheaper. I think housing prices are probably going to get cheaper. And especially if rates go higher over time, you're definitely going to see that combined with the demographics of the boomers passing on and different things have an impact in the real estate market.
Yeah, it's hard to say. I think next year is going to be unpredictable. I think we're going to see. Vela said it last Friday on a show that I had all kinds of stuff lined up to talk about. At the end, I had to leave early, unfortunately. But when the market is going to fall, leading up to that, you see a lot of pumps to bring in, the retail money to give exit liquidity to the big money, right? So I think that despite what you might see with interest rates, if you see a lot of pumps and it's kind of not making sense in a way, that should have your spider sense kind of tingling. And I think we might be seeing that next year.
Yeah, I mean,
Yeah.
You look at where, and this maybe goes back to the commodities thesis a little bit, and I'll fire my screen again. But I think you're already starting to see signs of that money rotation out of the equities from S&P into like the broader commodity complex, right? We've already seen precious metals moving. I think that's going to continue. You're starting to see like base metals, copper, iron, some of these other things wake up. The energy ETFs are not acting like oil's at 60 and going to stay there, right? OIH has been on a tear since really October, going from 250 to 300 something. XLE, if you look at if you zoom out, this is basically, they had the shale bust in 2014, and now we're basically knocking on all-time highs for the ETF, which is, I mean, basically Chevron and Exxon, but effectively, if we get above 50 with oil where it is now, like that's telling you something, that money is moving in to a lot of these spaces, and it's not because, oh, oil's at 150, these companies print cash. Like there's a lot of people expecting higher energy prices. XOP is kind of smaller producers and whatnot, and that has a long way to go. But I mean, you see what's happened since basically April tariff tantrum. And that chart is all screwy. But anyway, like the point is, like you look at oil at 58 or Brent at 61, it's not it's not telling you like we're going to have some booming economy, at least just yet. But if you look at the supply demand side, a lot of those numbers are like, I think they just did the biggest ever adjustment in EIA history. Like, and it's never that demand is higher than they expect or supply is lower. It's always all these adjustments are a certain way, right? So I think we'll see. Natural gas is one that's been interesting lately, and I'm waiting to see if the winter weather has an impact there. But again, I don't trade natural gas directly. I think that's it's called the Widowmaker for a reason. But one of the companies that I own just did a decent acquisition, so it's definitely a place to be looking, because I think there's like the money rotating out of like the S&P, out of the NASDAQ, out of some of these places. Like, look, I can rant about AI, can rant about the CapEx spend, can rant about all these different things, but do you really want to own some of the stuff at these valuations? And I think you're probably, I've kind of come around to the thesis of they're going to do whatever it takes to keep the market at least level or grinding higher slightly. But at the end of the day, you don't want to be there in that part of the market, because that's kind of where everyone's fishing. So it is like there's not much you can do to change it, but the whole passive side of things is completely distorted a lot of different price discovery mechanisms that might have been there in the past.
Well, as far as the whole like organic picture of it, right? It's just so tricky, man. If you can keep an eye on the energy, that's always like the key input. So, and it's a good play. I think commodities of all kinds are going to be good plays. But it is an interesting thing to use like oil price as a barometer of whether or not, the economy is booming. What would you, as far as those energy prices are concerned, what would you say is a benchmark for you as far as like, okay, this is where the prices are. Now I think we're going to see the economy go. Like, what would you have that priced at?
I mean, kind of the out of consensus view right now is that the economy is actually going to be better in 2026 than people think. And oil is like effectively it's a good gauge of how the economy is doing. And when you see, and not just like certain areas, like global economy. And if you kind of see oil starting to tick up, and it's not just one-off like geopolitical or supply related hiccups, it's broad-based demand starting to come back.
Yeah.
Then
Consistent.
I think you're going to see oil trend for at least a couple of years. And this is kind of like the line in the sand right now, where it's like we're basically at like a very low point, and you start to like, I'm not going to inflation adjust or start to run math on that front, but you look at oil to gold, you look at these different metrics, it's all screaming energy is very, very cheap, right? And when you have I don't know if this has ever happened before, but when you have the silver, basically 1 ounce of silver is now more expensive than a barrel of oil, right? You start to do that math, is like the times that it goes 1-to-1 is very, very rare. And going back to 1970 and then COVID with the oil price crash, right? It's happened 3 times. And right now where we're sitting, right? That chart looks like it keep going. And I think silver's going to keep going. So I don't know when oil goes, but when you see something like that, that's generally a pretty good time to buy energy. And it's the same thing for gold. And
Wait, how far back and how often does that happen? And when was the last time?
last time it was 2020, and that's like futures price like going negative.
Going negative, yeah.
So you can kind of say it doesn't really count. It never really got below call it 1.4.
But it trended down until then, so you can almost kind of say it works from
Yeah.
a timing because that looks relatively consistent.
Last time it got here was 1979, and that was also, I think, had to do with some of the Hunt Brothers stuff, and
but you
so
got four or 5 points there where it didn't quite hit like parity, but you see, I can't see the dates on the screen, but yeah, I see 1, 2, 3, 4, 5 times when it almost got there. You know?
Yeah, if you put like the well, I mean, it says this is almost getting there, but if you look at basically drawing the line at like 2, you see that generally does not stabilize that line for more than 3 to 6 months.
Yeah, that's the
right.
Yeah.
So the argument is that like there's potential that we could see oil really start to rally based on that, if it is like a better time mechanism. But again, like I think there's a lot of price manipulation going on in silver. So I don't know how useful that is. And if you look at gold to oil, it's kind of the same. Let me see if I can pull that up here. Why is that at 100? That's not right.
If you maybe do log or something. Yeah, log 2.
Anyway, my trading view is acting up this morning, but
if you just double click on the y-axis, then it'll make it a little more pronounced.
I don't know why. That must be like a weird contract deal, but we're basically, if you look at where things are for gold to oil, like it really doesn't spend. I think there's something weird going on there, but let me see if I can fire it up here. But point is, like when you get
you just do gold divided by oil, and yeah, hit the divide, just hit the slash, and then put whatever your contract you like is.
Yeah, I think that will work better.
And then double click the Y for yourself. Yeah, you might. I don't know, dude.
Yeah, my trade view is all jacked up right now. Right. I'll figure it out later. But point is, like when you have gold oil at like I think it's 55, 60, it's kind of the same deal where it's like that's telling you compared to real things, oil's very cheap and it doesn't spend much time there. So that's kind of, it's not maybe a great time mechanism. There are a lot of sharp people that say gold is becoming a central monetary asset, and that's where like Luke Grumman and other sharp people are basically saying gold's going to keep going higher and other things are going to get cheaper relative to that, which is fine. Maybe it will, but when that starts to happen, if that starts to happen, then I'm not like, you might as well throw gold oil out the window, right? Because if central banks are going to mark gold up to 10,000 an ounce or 20,000 an ounce or whatever it is, then it isn't as useful as it is when gold is a relatively freely traded commodity. So,
well, I know V's our resident gold guy in the audience, so he might have something to say about that.
Yeah, I mean, gold is going to continue to grow, man. It's the reason why gold is so vital and so important is that real economies that are basing their growth on actual physical production, they realize that you cannot trust a human component, some sort of stock, some sort of company like NVIDIA, who, if you believe it, is worth more than the entire country of Germany. It's preposterous. You need something that's real for the future of finance. And the thing that's real is the most defensible asset in human history, which has always been gold. And so the upside for gold is just tremendous.
Do you think it'll be marked up all at once, or do you think it's going to be doing what it's doing now and just make its way up there?
It's going to make its way up there. I could see us testing 6,000 or 7,000 by spring, summer.
Yeah. Well, yeah, the charts indicate that is quite possible. And by the way, I'm also with you, Ben, on 100 being a lock. I think we're going to see a move up. I think it's going to sustain. It might see some sideways movement for a while, but I think now that we've passed 50, everybody's looking at 100. And I think it could happen a lot sooner than a lot of people think.
Oh yeah. I mean, I think the thing is, you're not seeing, outside of like a couple accounts on Twitter, and this is where actually Twitter is very useful for investments. Like you can see the sentiment gauge on different stocks, on different sectors. It's not like the silver bugs, to call it, like silver stackers, whatever you want to call them, are saying to like mortgage your house and go like buy a bunch of silver. It's going to the moon. Excuse me. Like it's a lot of people doubting the rally. Like there are people that are saying it's going back into the 40s. Like there was one, I think it was like TD Bank or something, saying that it's short squeeze is over, like all this other stuff. I'm like, really? They just conjure up a bunch of physical metal? Because that would be news to me.
Well, I think it's what you said earlier, Ben. They're looking at the way things were. The world has changed.
100%. And like the way kind of sentiment is, I wouldn't be surprised if we blink and we're at 70, and people will be like, oh, well, that was the last chance to buy silver in the 50s. And like, I think the moves are going to be pretty interesting to see. And that's where, like, I own physical, like, bought a little basket of silver miners recently because, I mean, some of these things are stupid cheap. And when money starts to flow in to these sectors, it's like you get, I mean, these are all, like, a lot of these companies are very, very small. And you start to get money flowing in, and it, I think it's something where the setup is pretty interesting for the next 2 to 3 years at least, maybe longer. So
interesting stuff. That's V. Any final thoughts on all that?
No, great job, Ben.
Ben, any final thoughts?
Not really. I mean, we'll have to see if we get any Christmas surprises from the market. We'll have to see what happens with the Fed tomorrow, I guess. And I think it'll be interesting to watch precious metals if we get a bit of a Santa rally there. Like, I wouldn't be surprised if we, like, at all, if we are talking like 65 an ounce on silver, 43, 4,400, 4,500 on gold by the end of the year, and platinum at 1,800. But it seems like a lot of the metals are ready for another leg right now. And for anyone interested, I'll plug the podcast I put up this morning. For anyone interested in like small resource stocks, there's one in particular I think is very compelling. And I actually talked to the largest shareholder of the company and did a podcast with him yesterday. Put that up this morning. It's Millennial Potash. So I think it's worth a look. Not some big position, but it's a type of asset that could be basically a giant. So
millennials love their pot. I would say look at Thursday the 18th or 19th for the BOJ policy rate policy rate as the Christmas surprise, because if they decide to defend their currency, then that's going to add some downward pressure to most of the markets, the equities markets, that is. So it's tentatively scheduled for the 18th. We'll probably get the information on the 19th. So
yeah, well, that's
my last bit.
That's one that's been interesting. Like, you have a bunch of people talking about where Japanese yields have been going. It's like, that's pretty interesting for people talking about the carry trade, and that's outside my wheelhouse. But I look at it as like, if yields across a bunch of different markets are all starting to head higher, that's a danger zone for a lot of different things. So definitely makes sense to kind of be on your toes and be aware of some of these trends going on. I think you can basically set and forget it if you're buying the physical precious metals, but other than that, there's not a lot out there that's going to, I think, preserve real purchasing power over the next 5 years.
I can't disagree with that.
Yeah.
That's why I like to trade. I think I think even crypto is going to see a different world. It was allowed to grow, not being officially bolted on to the traditional finance, but they went ahead and went full bore into it during this cycle. So that's added a bit of uncertainty as to the next cycle. I don't think it's in their interest to let it go too high, but that's
Definitely not an interest.
Yeah, it's a different conversation
It's
altogether.
funny because when you look at crypto in general, right, the more traditional finance has been touching it, the more rigors that they're putting it through, the shittier the price gets.
Yeah,
it's amazing because it really doesn't fucking hold up, man. Like when you're trying to trade BTC, you're waiting around 6 hours for a damn thing to settle on the block. It's a problem. It's a problem.
Yeah, it's a problem. I mean, there's other solutions. Bitcoin has been outmoded for
Bitcoin,
a very long time.
Ethereum.
There's far better products out there.
Oh my god, so much better shit out there.
But anyway, I don't want to jump into a crypto conversation when I've already given my final thoughts 3 times. Ben, remind everybody where we can find you.
Yeah, so you can find the Substack or the podcast or YouTube at Contrarian Korner with 2 Ks. That's where you can find the podcast I mentioned earlier. You can find all the stuff there. I kind of do the deep dives on individual ideas for investments on the Substack, so you can find those there. On social media, I tend to rant a little bit more, but also talk a little bit about markets here and there. But definitely, main places are on YouTube and the podcast apps if you just want to listen. Substack if you want the more written, in-depth ideas.
Awesome. V, sir, can you get us out of here?
Yeah, absolutely. Thank you all for joining us. We'll be back tomorrow. Keep it locked and loaded right here. Tomorrow, Gus with Gus. With that being said, we're over and out. Take it away, Cowboy.